Okay, everybody, it is me, Gregory Mannarino. It is Thursday, September 23rd, 2021. Let's start off with the economic news that we got this morning. And people, yet again, no surprise to a single one of you who watches this blog, we got not one, but two rounds of bad economic news. And it's not going to stop. Understand, I know you get it. Um, the uh, the truth of the matter is our economy continues to shrink. It's not going to stop. There's no end in sight to our economy contracting as a percentage of GDP. I've covered this a gazillion times lately. You won't hear not a peep about this on the mainstream media outlets, and they're all flabbergasted as the bad economic news keeps on coming. And this morning is a classic example of that. So today, first time unemployment claims yet again, and this is every single week, another 351,000 people applied for first time unemployment claims. I had to write this down this morning. Now, this was much worse than expected, and I'm sitting there watching one of them this morning, one of these, it might have been Bloomberg, and they were like, oh, why is this number so bad? The economists, the rocket scientists who never get it right, they were expecting a number around 320,000, which is still epic. But we come in at 351,000. And then we find out that business activity yet again is slowing down here in the United States. People, I don't know when the general population is going to wake up to the charade that is going on around us all, what is actually happening here. You don't hear anything. There's not even a peep about how our economy is contracting at its fastest pace ever in history as a percentage of GDP. And wouldn't you guess, stock futures right now are higher across the board, pointing towards gains right at the open for this market. What else would you expect? It's just going to continue. The worse the news is, the higher the market's going to go. And, it just plays right into, what we heard yesterday from the Federal Reserve. We're not planning on tapering anytime soon. But then you got the mainstream media saying, the Fed is going to taper sometime soon. How do they do that? How do they make this up here? And let me tell you something else about this taper, okay? We've seen this before. I don't care. Neither do you. I know that. What comes out of the mouth of this criminal organization, public enemy number one, all they do is lie and lie. They can say they're tapering all they want to. If they came out today and said, hey, everyone, I got a big surprise for you, Fed Chair Powell, big surprise, we're going to start tapering today. No, it wouldn't happen. They're not going to taper anything. As a matter of fact, like I said, they will be increasing asset purchases under the table no matter what they say. And we can watch the debt market in real time to see what's actually going on. Remember, the Fed cannot just magically say things and they just happen magically. No, they have to get into the market and make it happen. So what that allows you and I to do is see what the Fed is actually doing by watching the action in the debt market, by watching the 10-year yield. Now, I know some people are going to go to the Federal Reserve's website and look at their balance sheet. Oh, do you think that's real? Nobody does. Nobody does, or nobody should believe that whatever's on the Fed's website is true. No, it's all fake. It's all propaganda. They can put in whatever numbers they want to. There will be no taper at all anytime soon. And mark my words, if the ECB, which they just said yesterday, decides to increase asset purchases, the Fed will and must follow suit. People, I know you get it. And there are some people that just don't. They refuse to understand what's actually going on. This is a takeover on a global scale. Central banks are going to continue to buy assets in an attempt to own it all, in an attempt to fulfill their endgame of being the lenders and buyers of last resort. This has been their goal since their inception, people, over a century ago, to at one point bring the world economy to its knees by any means necessary, even if that means introducing a scamdemic, to allow the economy, to force the economy to shut down so they can do what they want. They can become the lenders and buyers of last resort. Nothing is what it seems. Nothing is by accident. And everything pretty much that is put out, all the information that is put out there by the mainstream outlets, it's all propaganda. It's not real. It's look here, don't look here. Trying to keep you off balance, trying to cause you to make bad decisions with regard to your money and everything else. This is really what this is. It is epic. All right, so on top of the not one, but 2 rounds of bad economic news today, and this is terrible. Again, 351,000 people every single week. It's around the same number. And this was unexpected, of course. Took those economists totally by surprise. They were expecting a better number. Still an abysmal number. They were expecting 320,000, but we got 351. Business activity slowing down. Stock futures higher. Imagine how shocked Greg Mannarino is. Anyway, gold and silver right now, people are under pressure. You got a weaker dollar right now, and even with the weaker dollar, you're seeing pressure on precious metals. You're also seeing cryptocurrencies trade sideways this morning. Crude oil slightly lower. 10-year yield higher, okay? 1.36. Let's keep our eye on that. Again, we're getting close to the top of a range. I covered this in my markets, a look ahead segment that I did Sunday. We need to keep our eye on this. I don't particularly like it when the 10-year yield starts bumping up against the top of a range here, but we're going to keep our eye on that. Again, we're looking for a spike. When we see an uncontrolled spike in the 10-year yield that is rising rapidly above its current range, then we got to start to worry. Then we got to start to rethink our strategy here in the market. And again, if you follow this blog, and I do these twice a day during the week, you're way ahead of the curve and you will remain there. I promise that from a long time ago. So you will know when it's time to get out of this market. For now, we're sitting pretty. We're going to continue to buy the dips as the 10-year yield remains stable. The dollar is in a range here. Crude oil remains where it is. It's going higher in my view. We know what to do. We know why we're doing it. People don't know another way to put this either. We got it covered from every angle. And we are never, ever, ever going to let the freak show, shit show, these criminals, our supposed representatives who represent nothing. They represent the real government, which is the Fed. We're not going to let them beat us at all. Okay? It's every man and every woman for himself. And you and I, we got it. All right, look, I'm out of here. Let me make sure I covered all the stuff this morning just real quick here. Yeah, pretty much that's it. I will see all of you at the end of the day. Please share the video. And that's it. See you later.